Hello friends. Friends, we are going to continue with share capital. And we were discussing about forfeiture of shares. Right? Forfeiture of shares. Now we discussed what is forfeiture. A shareholder to whom the shares were allotted, he failed to pay the call money. The company sent him the notice of 14 days. Even after the notice, the shareholder did not pay the money. Then the company cancelled the subscription for that person. Right? That means that person is no more the shareholder of the company. In that case, I told you 3 accounts are affected. One is our share capital will reduce. Right? Account debit with the amount called up. Then to forfeited shares. In the forfeited shares, whatever amount you have already received on the number of shares forfeited, whatever amount you have received is kept in a separate account known as forfeited shares account. This amount is not refunded. This amount still lies with the company. Right? This is the company's amount. This amount is not refunded to the shareholder. Right? This is what we discussed. Then there is to calls in arrears account. Clear? Then we discussed that forfeiture of shares can be for 2 types of shares. One is shares issued at par and the other is shares issued at premium. Right? And we discussed that if the shares were originally issued at premium, then how to affect the forfeiture. That depends upon whether the premium has been received or premium has been called but not received. Right? So this is all what we have discussed in the forfeiture of shares. 3 accounts are affected. Share capital is debited, forfeited shares is credited, and calls in arrears is credited. Now, here I told you that this forfeited shares account is for the amount that we have already received from the shareholders. The shares we have forfeited, we have received some amount on those forfeited shares. So that amount is kept in a separate account known as forfeited shares account. And again there is a restriction on the use of this money that is being kept in the forfeited shares account. This money cannot be freely used for any purpose. There are specified purposes for which this forfeited shares account money can be used. This money belongs to company. Company issued shares. On those shares they received some money. That this money belongs to company only. Right? Now what we are going to do in this lecture is, the company forfeited the shares, they cancelled the subscription of a person. Right? And after this forfeiture, what they do is they reissue the shares. They reissue of forfeited shares. They cancelled the subscription of one person and they again issue these shares to the public that if anyone wants to subscribe to the shares of the company, this much shares are available for subscription to the extent of forfeited shares. Clear? So the number of shares which were forfeited can again be reissued to the public. Right? Now, if they are issued, in case of reissued, there are three possibilities. They can be reissued at par or at premium. And the third possibility here is at discount. Right? Now let us take an example that 1000 shares of rupees 10 each were forfeited. Right? Were forfeited and then reissued. On this, I will say 5 rupees was received, which was credited to forfeiture, and 5 was calls in arrears. Right? This is what I am assuming. Okay. And then reissued number 1 at par. Second, at premium of rupees 2. Then third, at discount of rupees 2. Clear? That means you can reissue these shares at par, at premium, or at discount. Now, how to deal with this? If you are issuing the shares, when you are issuing the shares, you will receive the money again. Obviously, if you are issuing the shares to the public again, you will receive the money. What is the entry? Say first case, what will be the entry? Bank account debit to share capital account. Isn't it? How much? 10,000 rupees. Simple. Your share capital will increase and you have received 10,000 rupees in your bank on the forfeited shares. Your bank will increase. The forfeited shares you are reissuing to the public. If you are reissuing, you will receive money and that money will become your capital. Your share capital will increase and your bank will increase. So the entry will be bank to share capital. Now, if these forfeited shares are issued at a premium, then what to do? Bank account debit. In bank, you will receive on 10,000 shares at the rate of 12 rupees. Sorry, 1000 shares, not 10,000 shares. 1000 shares at the rate of rupees 12. 12,000. Right? Now, out of this 12,000, what is capital and what is premium? You know you have to separate the part of capital and the part of to securities premium reserve account. 10,000 is your capital and 2 rupees 2,000 is your securities premium reserve account. This is when you reissue the shares at premium, that is more than the face value. Clear? Now, third part is when you are reissuing the shares at a discount. In that case, what is to be done? Now, what you are receiving, bank account debit. Bank account debit with what amount? On 1000 shares at the rate of 8 rupees. 8,000 rupees you are receiving in your bank to share capital. Now, share capital we have to increase by 10 rupees. Our capital will increase by 10 rupees. Then where will this 2000 go? This 2000 money we will take out from the forfeited shares account. Account debit. 1000 into 2, 2000 rupees. Why? Because see, the company will not otherwise issue shares at a discount. Company don't want to be at a loss. Otherwise, if you go in the market, your share is selling at 10 rupees and you are selling your share at 8 rupees, then you are at a loss of 2 rupees. Why you will issue at 2? In case of reissue, company can issue at a discount. Say the company forfeited 1000 shares, right? Company reissued these 1000 shares to the public, but they are not getting the subscribers to those shares. In that case, what will be the company doing? They will say, okay, we give you 2 rupees discount on these shares, give us 8000 rupees and take the share of rupees 10 each. What is the face value of the share? It is 10. So share capital will be credited with 10 rupees because for the subscriber, the value of the share will be 10 rupees. Right? Like you say, like you see that the sales are there. Similarly, what happens when there is only few stock left? What they do? They increase the sale value. They say 50% discount, take away the stock. 60% discount, take away the stock. Similarly, there are not much subscribers to the shares of the company. Company reissue the forfeited shares at a discount, and that discount will be met through forfeited shares account. You have the money in the forfeited shares account that is kept separate. That was the money that was received on original issue of shares, right? So you have received in bank 8000 rupees and 2000 rupees the discount given to the public on the reissue of forfeited shares will be met through forfeited shares account. And I told you there are restrictions on the use of this forfeited shares account. It cannot be freely used for all the purposes, right? There are restrictions on the use of forfeited shares account. Clear? So this is how you have to pass the entries in case of reissue. If it is at par, it is simple, bank to share capital. If it is at a premium, then securities premium reserve account will be credited. Bank, if it is a case of discount, then the amount of discount will be met through forfeited shares account. Share capital will increase by 10 rupees only because for the subscribers the value of share is rupees 10. Right? So the loss, the discount you will met through forfeited shares account. Clear? Now tell me one thing. You originally issued the shares, you originally issued the shares, right? You received 5 rupees on those shares. Say on these 1000 shares you have received 5 rupees. That means 5000 rupees you have received. That is kept in your forfeited shares account. You must have passed this journal entry. Share capital with the amount called up. Say on 1000 shares we have called up 10 rupees. So it is 10,000. On 1000 shares 10 rupees. Now to forfeited shares account, how much? 5000. Because on 1000 shares you have received rupees 5. And to calls in arrears account 5,000 rupees, 1,000 multiplied by 5. Isn't it? This is the journal entry you would have passed. Now this forfeited shares account reflects the amount that was already received against the original shares, and that is kept in a separate account known as forfeited shares account. Earlier it was your capital. Now your capital has been transferred to forfeited shares account. That is, you have transferred money from one pocket to second pocket. But the second pocket also belongs to you only. Isn't it? So this forfeited shares account is the money of the company only. Right? This much clear? Now, when you have reissued these forfeited shares, you have received the money again on these shares. Right? You received 5,000 earlier, you were to receive 10,000. Right? Out of 10,000, you received 5,000. You kept 5,000 in your pocket. Now you forfeited the shares. You forfeited the shares. You take out 5,000 from one pocket and keep it in the second pocket. Okay, this 5,000 is still with you. Now you reissued these shares and again received 10,000 on these shares. You keep the 10,000 in the first pocket. Now what is the total money that you have? 10,000 in one pocket, 5,000 in the other pocket. You have 15,000 rupees now. If these shares would not have been reissued, then either you would have 5,000 or 10,000 if the money is received. Isn't it? The maximum, if the shares were not forfeited, the maximum amount you would have in your pockets is 10,000 rupees. But now you have 5,000, the money earlier received, and 10,000 now received again on the reissue. You have 15,000 now. Isn't it a profit? Isn't it a profit? It is. So, this forfeited shares account 5,000 rupees, in case the shares are reissued, right? Then the balance in the forfeited shares account is our capital gain. Write this down. In case of reissue of shares, balance in forfeited shares account is our capital gain. Right? Is a capital gain to the extent of shares reissued. Right? And this capital gain is transferred to capital reserve account. Clear? So what is the journal entry for this? Now there can be three journal entries, basically two journal entries, sorry. Now in these first two cases, do we have the share forfeiture account anywhere? No. That means whatever the balance is there in the forfeited shares account, that will be transferred to, in first and second case, we will say forfeited shares account debit to capital reserve account. How much? 5,000 rupees. Now in case the reissue is at discount, then we discuss that you have to met the loss through forfeited shares account, right? So here the forfeited shares is credited with 5,000. Here you have debited with 2,000. Now what is the balance left in the forfeited shares? We have used 2,000 to meet our loss of discount, right? So what is left in the forfeited shares account? What you do is you have 5,000 in the second pocket. Now what you do, you take out 2,000 from that pocket and keep it in your first pocket. So what is left in the second pocket? 3,000. So 3,000 will be transferred to capital reserve. Forfeited shares account debit to capital reserve. 3,000. Now try to understand again. What you have done is you issued the shares, right? 1,000 shares of rupees 10 each. You received 5 rupees on those shares, that is 5,000 rupees you have received, and 5,000 rupees you did not receive, and you forfeited the shares. Now the 5,000 rupees that you have received, you transfer it to forfeited shares account. That means you received 5,000 rupees initially, you kept it in your pocket 1. Then after the forfeiture of shares, what you do? You take out 5,000 rupees from pocket 1 and keep it in pocket 2. Clear? You still have 5,000 rupees with you. Now you reissued these shares at par or premium. You received 10,000 rupees. When you received these 10,000 rupees on the reissue, you kept these 10,000 rupees in pocket 1. Right? 5,000 rupees forfeited shares, pocket 2. Now fresh reissue of the forfeited shares, 10,000 money received, kept in pocket 1. Right? So in all you have 15,000 rupees. And remember one thing, whatever the amount is lying in your pocket 2, that is your capital gain. That is your capital gain, and that will be transferred to capital reserve account. Clear? Now in case of discount, what happened? 5,000 is in your pocket 2. In pocket 1 you received 8,000, but you were to receive 10,000 rupees. You gave a discount of 2,000, but you don't want to be at a loss. What you do? You take out 2,000 rupees from pocket 2 and keep it in your pocket 1. Now in pocket 1 you have 10,000 rupees. Your capital is complete. What is left in pocket 2? Out of 5,000 rupees, you take out 2,000 rupees. What is left? 3,000 is left in the pocket 2. And I told you, whatever is the money there in the pocket 2, that is your capital gain. So pocket 2 is your capital gain. 3,000 is left. So in case of discount, the forfeited shares account to capital reserve 3,000. Clear? Now this is important. One line is important I have written. To the extent of shares reissued. Right? Why this line is important? Because if the shares are not reissued, then you cannot calculate gain. Then you cannot say that this money is a gain. Why? Because we haven't received any extra money. Right? Rather it is a loss. We were to receive 10,000, we received only 5,000. If these shares are reissued, we again will receive 10,000, that will make 15,000. Originally we were to receive 10,000 rupees. Right? Now compare with that original amount, 10,000 rupees, but now we have 15,000 rupees. That means we have a 5,000 rupees gain. Simple. Clear, friends? We'll discuss this in the next class also. To the extent of shares reissued, we'll discuss about this in detail. Right? The basic concept of reissue is clear. Right? So friends, if you have any queries, just send me an email at ksjteaching gmail.com, right? And in the next lecture, what we are going to discuss is, we'll continue with reissue of shares, right? Reissue of shares, right? So that's all for this lecture, friends. Thank you so much.